Well, good evening, everyone. I think we'll get started. Thanks so much for your time and for registering to come to tonight's webinar. I hope you'll find it useful. We won't spend a lot of time, but if you have questions, feel free to ask. There is no such a thing as a dumb question. So don't hesitate if there's something you don't understand. We have uploaded to your portal the tax organizer. And so if you've had a chance to go through it, then hopefully you've got some questions. And if you haven't, we'll go through it tonight just to familiarize yourself. The purpose of going through this tonight, as we've done returns over the years, one of the things that we notice is that when we send out a document like this, it's interpreted by people differently. The questions in the sections are differently. And by the way, this organizer that you're seeing on screen will cover all types of taxpayers. So if you see healthcare professional there, don't feel that it's not applicable to your circumstances. There is very little difference between the two. But the purpose for tonight is just to save you some time as you get ready to pull together all of your documents, to reduce the risk that we're going to miss some important information when we set about preparing your tax return, to answer any COVID-19 related questions that may affect your taxes. There are some particular items with respect to that we've asked in that organizer, but just to give you an idea of some of the implications, and then also to review upcoming installment filing, payment due dates, as well as RRSP contribution dates. So this is the first page of the organizer. And once we get into this, just to answer the question up front, who should complete this? We get this question each year, and it's always a cause for questions, which is, do I fill out one for my family, or do I just fill out one per person? The idea here is that for each tax return submitted, we would have an organizer. Now, that doesn't mean you're going to have to go through and answer the same information time and time again, but the unique and distinct information, please fill it out. Your marital status. What is your marital status? The question, firstly, you can see just down at the bottom of the screen here, if your marital status has changed during the year, please provide the date of the change. So make sure you don't miss that question. There is often a lot of confusion around common law. What does common law mean? And so in the previous slide, you can see that one of the areas here is common law, and so people oftentimes don't know whether they're common law or not if their relationship is started during the course of the year. Here's what CRA says about living common law. Living common law means one is living with a person who is not their spouse, but with whom they have a conjugal relationship and to whom at least one of the following situations applies. They've been living with you in a conjugal relationship for at least 12 continuous months, and there's a note about what that means. They're the parent of your child, and remember, this is at least one. So it just has to be at least one of these conditions to meet the definition of living common law. They are parent of your child by birth or adoption. They have custody and control of your child, and your child is wholly dependent on them for support. So that's CRA's definition of common law. If you fall into that situation, then that's how you would address that. People oftentimes ask as well, is there any advantage to common law or not? There can be some tax credits that are affected, but typically the impact is on very low income couples. So typically once income gets above $20,000, then there's little, if any, impact of the difference between reporting single versus reporting common law. Did you move this year? And this question isn't so much moving within Canada, but did you come to Canada? Did you arrive in Canada or immigrate? Or did you emigrate or immigrate? And if so, then please provide the date that occurred. So date of entry into Canada or date of departure. The date of entry is usually pretty straightforward. The date of departure is more problematic. So there is a form called an NR73 form, which is filled out by people who are leaving Canada. So if during the course of the year, and if you're watching because you're, for example, going to school outside of Canada. This is the form that would be filled in. Or if you've accepted a position, say at a hospital in the US or something like that, and you're not certain whether or not you're continuing to remain a resident of Canada, this would be the form that you would fill out. Now, don't submit this to CRA. This is just a prompt so that you will have a better understanding of your status. And I'd say upload that to your client portal so we can take a look at that to assist you in making a determination, because this will impact your filing position with CRA. Now, that was leaving Canada. This is a form called a determination of residency status entering Canada. So this is the entry point questionnaire. I'm putting these documents on screen so that you're aware of their existence. And you can always go back and watch the video if you need to afterwards if you can't remember the form. But these are the forms that will help determine when you enter Canada, what the date is that you enter Canada, because there's tax implications from that date forward, as well as from your previous country from that day backwards. So that's what we're getting at with that question. This question we get a lot. How do I change my address with Canada Revenue Agency? And you can see on my account on screen here, change my address and phone number. You can do it right online. All right. So if you've had a move during the year, go online and update your address there. All right. Now, in particular, do you have a US filing obligation? If so, let us know about it, please. That's all we ask at this stage. We'll reach out and determine if you have your return being prepared or not, but we just need to know that. Okay, now, page 2. So we've moved past page 1. We've gone through the relevant sections there. Now let's look at page 2, and we start with COVID-19. So let's just take a look and see what the questions are. The first question, we are getting a lot of questions from people around the CERB benefit that was, the Canadian Emergency Relief benefit that was issued. If you've got that, please indicate that you have received it. Indicate also if you repaid some of it, and then also the number of weeks that you worked at home. If you did work at home and it's more than 50% of the time, then over a period of 4 weeks during 2020, then please let us know about that, and in particular a day count. Now, there's a question down here: did you have do you have a signed T2200 or T2200S form? All right, let me go back because I think I'm getting ahead of myself here. All right, I am getting ahead of myself. All right, let's go back to the first question. Did you receive COVID-19 benefits from the government? That's the program we talked about. If you did, you will, if you haven't already, you will be getting one of these forms. It's called a T4A, right there. And this is the document that the government is issuing, and you'll know that because you'll see up in the top left corner who has issued it, and we'll say the Government of Canada. And on here, you will see the amount that you received under CERB. This is the nightmare for the government, because now the point at which they put money into taxpayers' hands because they needed it, now they're claiming the tax. And so this will be an interesting time. But there was no income tax withheld on those initial payments. And now the full amount of the benefit that you received will be added to your income if you received CERB. It will be on this document that you receive it. All right, now I want to go on to this document because the next item on here, I'm going back, was did you work at home for more than 50% of the time? So the government has responded to the fact that so many people have worked from home, and they've given 3 options this year that people can claim a portion of their home expenses. They can do it 3 ways. One is an informal process, which is based on not getting any kind of verification from your employer. It's a straight $2 a day up to 200 days, and you can claim this amount on your tax return. That's the first most simple way for people to get some relief from having worked at home. The second is by having their employer complete this form. Now, if you're a medical resident, for example, you will have normally each year you will receive this document called the Declaration of Conditions of Employment. Because of COVID, the government has come out with this document, which is very similar, but this just addresses the Declaration of Conditions of Employment for working at home due to COVID-19. So this document is the document that an employer will give to an employee who doesn't normally claim employment expenses, but because of COVID-19, they had to work at home, all right? So your employer will fill this out for you. Your employer will sign it. As you can see down at the bottom here, name of employer, name and title, signature of employer. Now, as you read through this, in this section here, you'll see that it will say that you don't submit this, you don't attach this, this doesn't get submitted to CRA, but you should keep it in case CRA asks to see it, okay? So this is something that's kept on file. The fact that your employer has signed it means you can make a claim for the expenses incurred working at home. That's the second way. First way is the simplified, no verification from an employer, $2 a day, maximum number of days, 200 days. Second is this Declaration of Conditions of Employment, just dealing with this. And the third is Declarations of Conditions of Employment. And this is the normal form that people who, for example, if they're a medical resident or something like that, this is the form that will be prepared for them and that they need to keep on file. Normally, there will be questions about expenses that have been incurred. Do you require this employee to incur expenses? Is these sections here? And the employer will indicate that. Same concept with this form. It's not submitted to CRA, but it is signed by the employer. It's signed on page 2. In this case, it's a double-sided form. But you need to have this document on file, not only to claim your home office expense or working from home, the expenses associated with that, but also any other expenses as an employee. So make sure you have this when you provide the information for your taxes. That's what is required in order for you to be able to make a claim for expenses. All right. Now, skipped past one. Now on to the next. Now onto the next COVID-19 plan, which we're seeing, and there initially this wasn't available to self-employed people, but it did become available later in the year, not only to corporations, but to a self-employed person who had a business, who had a bank account, a business bank account. Why am I telling you about this? Because it's a loan, right? It started out at $40,000 and then they increased it to $60,000. Well, the reason I'm pointing this out to you is we need to know if you got this, not your professional corporation, not your corporation, but if you were a self-employed individual with a business and you qualified for this, we need to know. Because the way this program is working is the government wants you to record or report the grant portion that you will receive if you repay it in the future. So you might remember that that part of the condition of this program was that by December 31st, 2022, you would repay the $30,000 of the $40,000 loan, or then when they changed it to 60, you would repay 40 of the 60. Well, the government's saying, we gave you that money this year, report it in income and pay tax on it. Not in 2 years when the money comes due, you do it now. All right, so I'm just drawing that to your attention. All right, continuing on page 2, there's this section, which is dealing with income, all right? And so I'm just going to point out to you some of the more common slips that people should be receiving. I won't go through all of them, but you're used to getting a T4 slip if you're an employee. The T4A was the form I talked about with respect to collecting CERB, or maybe if you're a healthcare professional, you're doing some locums or something like that, you may get a T4A form. It looks, here's your T4, and the T4A form we looked at previously, that was the one the government was using to report CERB. No income tax, or there could be income tax, but typically there's no income tax withheld on the T4A, whereas on the T4, there is. So you'll know if you look here, here will be your salary, and then there will be CPP, and then there'll be employment insurance, and then there'll be income tax over here, and there'll be your name and social insurance number. That's a T4 slip. This is the statement of remuneration paid. This goes to employees. So look for that. If you're not sure what a T4 is, that's what you're looking for. If you have investments, then you will be getting one of two slips, or maybe both, depending on what your investments are. The first is a T3 slip, and this slip will report things like dividends, and you'll see right here, actual amount of dividends. So if you receive dividends on stocks and things like that, you will be getting one of these. These forms are not issued, well, they can be issued anytime, but the filing deadline for these is March 31st. Why am I telling you that? It means we can't complete your tax return until we've waited until March 31st, because you may have some income from dividends, capital gains, or things like that. So that's a T3 slip. The other slip, more common, is a T5 slip. This also reports things like dividends, but it also picks up other types, interest, for example, capital gains, dividends, and so on. Now, I'm showing you this because this is a very common form. This will come with packages from if you have private wealth, they will send you reporting packages that will have slips like this, as well as the backup to the totals that are reported on this page. Make sure you send us both this slip as well as the backup to support these numbers. It can be several pages long, but it will basically, if you look on the detailed listing, it will talk about the amount of actual dividends, and it will give you a printout of all of the dividends that are listed. Oftentimes, if you have an investment account, there'll be multiple dividends that are issued from multiple sources during the year. So that backup document in support of this is also needed. Please upload that. This is a T5008 form. It is used to report the sale of investments. So brokers, investment houses issue these each year. It will show the year and the amount that was received with respect to the sale of investments. They are required by law to do this. This is a reasonably new form. So make sure you look for a T5008 form, because we will need that to report any dispositions of stocks or bonds or equities, mutual funds, ETFs, things like that. All right. Continuing on to deductions now. Now we're still on page 2, but at the bottom, we're dealing with some of the more common deductions that you will see. Union and professional dues. So if you're a member of CARMS, for example, you would supply us with any receipts, although typically those union and professional dues are taken care of on T4 slips. The childcare expenses that you might have, you can see here, please provide us with a list of those expenses and a receipt for each child. Moving expenses, if you moved at least 40 kilometers to be closer to a job or education, and alimony. All right, let me just move forward here, because when it comes to moving expenses, there is information that's needed. This form is called a T1M form. I'm not asking you to fill it out, don't do that, but just look at the information that's requested on it and make sure we have that information, because if you move for job or school, we are going to have to complete this in order for you to be able to deduct your moving expenses. So this is the form we will be completing. Take a read through it, go online and look for the T1M form and just familiarize yourself with the information. But please don't feel you have to complete the form. This is just what CRA is looking for in order to make sure you qualify for moving expenses. All right, continuing on with deductions. We've already looked at that form. Oh yes. All right, if you have a student loan or a particular type of student loan. So sometimes people will say to me, yeah, I've got my line of credit. That is not the type of loan that qualifies for the student loan interest tax credit. It is only a loan that is set up with the National Student Loan Services. You'll get a statement for this. So make certain that you provide us with that statement so that we can claim the loan interest as a tax credit on your tax return, all right? But it doesn't qualify for, if you're with RBC or Scotiabank and you have a line of credit, that's not the interest that qualifies for this. This is student loans, specifically student loans. All right. Self-employment and business income. That's section 5 of the return, sorry, not the return, but section 5 of our tax organizer. We always get questions about this one. Are your financial statements or schedules of revenue and expenses attached? What do we mean by this? Well, for those of you that have employment expenses, or maybe you're self-employed and you've done locums, or you've got a business that you operated as a sole proprietor, then throughout the year you will have needed to keep track of your income, the money you've received. And I'm not talking about employment income here, but if you're a trainer, for example, and you've earned income, maybe you've earned some of it from personal training and also from also online. We need that revenue. And then, of course, there are your expenses as well. If you're a client and you're self-employed, you will have received our expense tracking worksheet, whereby you download your expenses from your credit card and credit card website and populate that. We don't want the receipts. Please don't send me all of your receipts, but do populate that Excel spreadsheet, that expense tracking worksheet, and send us that. So if that's your situation, please answer yes to the question and then upload the Excel spreadsheet containing both your revenue as well as the expenses you have for the year. All right. If you used your vehicle for work purposes, did you keep a log? Many people don't realize they're required to keep a log. We do our best to let people know, but please make sure you answer this question. If you do use your vehicle for work or because you're self-employed, then please let us know that. And this is the type of log that you should be keeping. Now, I'm always talking to clients about using MileIQ. It's a Microsoft program. It automatically operates in the background. It sits on your cell phone and it keeps track of your trips. So but you can see here the degree of detail that CRA expects. They want to know the date. They want to know whether it's a business. So you're keeping track of all of your trips here. And then was it a meeting? They just want to know the business trips. So these are all categories. If you continue to make a trip to the grocery store each week, it's going to automatically categorize that trip as a trip to the grocery store. But what they want to know is, all right, what's the total kilometers that you've driven and how many for those particular trips that are business. At the end of the year, this report will have all of your trips that MileIQ has kept track of. You will have needed to classify as you go, just by swiping left or right for business or personal, and for repeat trips, it'll eventually pick up on whether that trip is a business or personal one. But this is the degree of detail CRA expects to see in a mileage log, all right? So if you're gonna claim your auto expenses, you've gotta be keeping one of these. If you haven't been to date, then get started doing it, all right? All right, hope that gives you a little bit of insight into keeping track of auto expenses. Tax credits. Here are some of the more common tax credits: tuition and education amounts claimed by you, your spouse, or dependent children. Property tax paid during the year. If you've got these types of items on this side, these are the types of forms or the information that is needed. Now, common tuition and education. If you had university tuition slips, keep track of those. If you wrote professional level entrance exams or qualifying exams, keep those. Those are tuition and education related. Each year, your university with which you are affiliated will give you one of these forms. This form is called a T2200 form, a T2202 form. All right, and it keeps track of tuition that's paid, the institution that issued it, and so on. This form has changed a lot over the years. This is a very abbreviated form, but this is automatically issued by the university or the college that you are attending. You shouldn't have to ask for this. It should be in your portal. It's automatically generated. This form is for tuition and enrollment for universities attended outside of Canada. So if you were a medical resident in the Caribbean, or if you were a medical resident in Ireland or anywhere else in the world, those countries and the universities that you're attending don't know we give tuition credits to people. And so instead of this automatically being generated like it is by colleges and universities here in Canada, because they know the tax regime for tuition credits, you have to go to the university and present this form and ask them to complete it and ask them to sign it right here. It's not usually a problem. I've never run into this as a problem for people. But in case the university isn't certain what you're asking them to sign, CRA actually has this information kit, which you can get online, which explains to the administrator of the university what they're being asked to sign. All right. It's an RC 190 form. All right. That's what you would want to give if you find yourself or if you have a family member who is attending university abroad. This is the equivalent in that situation. So make sure you have that filled out so we can claim your tuition credits. All right. The next item on here, which oftentimes causes confusion, is about claiming spouses or children as dependents for disability amounts. And so if this is your circumstance and you have a spouse or dependent who has a medical condition, you'll need a T2201 form completed by a physician or a licensed medical professional. All right. And it looks like this. It's several pages long. I'm just giving you the covering page so you can see what it looks like. The form number is down in the bottom right and bottom left corner of the screen, if my if this would cooperate, but it's a T2201, and that's what you would give to the doctor who is the overseeing doctor in that circumstance, and ask him or her to complete this. Depending on their response will determine whether or not somebody will qualify for a rather significant disability tax credit. That's what we're going for when we have those forms completed. All right, so if that's your circumstance, or if you're not certain about it, reach out and let me know, and I'll give you some more information on this. All right, did you sell your house this year? If so, a couple of things, or did you buy a home? If you bought a home during the year, then there's the first-time home buyer tax credit, which if you've not owned before, you will qualify for, or you should qualify for. But then there's also selling your home, and we didn't used to have to worry about reporting our home sales on our tax return, but that changed a couple of years ago, and so that is required. So if that's your circumstance, then we will need the offer of purchase and sale agreement, not the offer. We need the purchase sale agreement plus the statement of adjustments from your lawyer. So if you will have received a package which should have all of those in it, if that happened during 2020, please provide us with that information. All right. Okay. Those are kind of the areas that we find people have the most questions about with respect to the tax organizer. So I want to move on to some important dates, which I'd like you to put into your calendar right now, in your smartphone, all right? And make them recurring appointments so that each time these dates approach, your calendar reminds you to think about whether or not you have an installment due, because you might if you have self-employed income, or if you have significant amounts of investment income. CRA may notify you and let you know that you have an obligation to pay installments. It doesn't mean you have to pay the amount they're telling you, but you need to be aware that if there is a payment to be made, it needs to be paid by these dates. So in your calendar, create an appointment. I would say by the 10th of each month, so that you've got enough time to respond, because even if you were to make a payment, it doesn't get received by the government until the following day. So you don't want to be making this payment on the 15th because it's going to be received on the 16th, and they will charge you interest for that day. These are the installment due dates. You can find out, you'll be notified either online by CRA, giving you a notification. And I will say that we find a lot of people forget to check their account with CRA, their portal online for messages. CRA is always putting messages. We go online because you've authorized us to, and we'll see 8 unread messages. And they will be dealing with things like this, or your notice of assessment, or requests for information. You need to check those notifications. Check with CRA to see if there's any messages, any unread messages. They can be time sensitive, so you don't want to miss them. The tax filing due date, if you are only an employee, your personal tax return is due April the 30th, okay? If you have self-employed income, your due date is June 15th, all right? So if you're an employee with no self-employed income whatsoever, your filing due date April 30th, set yourself an appointment. Do it by the 15th of April. Say tax return due in 2 weeks, right? So again, you won't overlook these. If it's self-employed, set June 1st as your reminder date in your appointment, so that at least you don't get caught unawares. Payment due dates. For both personal and self-employed individuals, it's April 30th. Wait, Jonathan, what are you talking about? You just said down here, June 15th for self-employed. You must have made a mistake on that slide. No, if you're self-employed, you have until June 15th to file a tax return, but you must pay any tax that's due by April 30th. Well, how can that be? Well, if you haven't got your tax return done, there's no late by April 30th. There's no late filing penalty if you don't meet that deadline. But the Income Tax Act says we're going to treat everyone equally. And so whether you're self-employed or not, everybody has to pay their taxes by April 30th. If you haven't got your tax return done, either we'll make an estimate for you or make an estimate and get a payment in. If you don't, there'll be interest on any unpaid balance, all right? If you pay more than you need, you'll get a refund or get carried forward to the following year. So don't forget about the payment due date being April 30th, all right? RRSP contribution deadline this year is March the 1st, all right? So just be aware of that. That's coming up quickly. All right. A couple of tips just to save us both our time, yours and ours. Firstly, don't email your documents. It's not secure. Use your client portal, please. All right. Please upload documents to your client portal. Secondly, people think we need to see all 12 pages of their Bell Mobility bill for every month. And they very, very carefully scan in every page of that document. We only need the page that shows the amount, if we need that at all, because ideally you're keeping track of all of those things on your spreadsheet, your expense tracking spreadsheet, and you're not sending us an invoice. But if we request an invoice because we want some further backup on something that we see on the page, please don't send us all 12 or 13 pages, including the advertising amounts that are shown on your Rogers bill. We don't care, and neither do you. It will take time. Just find the page that shows the total and send us that, okay? So, and please don't upload. You can select, if you are uploading things like your T4 and your T5 and all of those slips, you can create one document and upload it, or select multiple documents in one upload. You don't have to continue to upload for each document at a time. And then please don't scan using color. It takes up space for you and it takes up space for us, and it takes forever sometimes to print those out if we have to print it out. So print them using, or upload them using, black and white, all right? All right, any questions? Mustafa, any questions that have come in?
Yes, we have one question here asking if we have to pay ourselves a salary as an employee in our MPC, are we able to claim the home office expense deduction for 2020 in our personal tax return?
Okay. If you have an MPC, then your expenses, that's a very good point. Because this addresses a few issues. If you have medicine professional corporation, or if you have a professional corporation, generally speaking, you'll get a reimbursement from your corporation. So you don't claim the expense on your personal tax return. It's reimbursed to you from your corporation, and your corporation claims the expense. All right, so get a reimbursement rather than reporting it on your personal tax return. Now, a couple of things about this. There are people that will have, for example, I'll use medical residence because this is where we run into it most commonly. You have been an employee during the year from January 1 until June the 30th. You finished your residency. You started billing as a self-employed person from July 1st onwards. What information do you upload? There you upload your expense tracking worksheet so that we can see the expenses that you've had, which will have not only the expenses, but also the revenue that you've generated. So that's a scenario where that's a year in transition. You've got T4s for January 1 to June 30th, and then from July 1 to December 31st, you're self-employed because that's when you started, you got your independent medical license. So the information we need is on that expense tracking worksheet, plus the things like your tuition slips, exam invoices, and things like that. Now, second scenario, you're in practice, but this year you incorporated, and you incorporated on the 30th of September. In that case, then you would submit an expense tracking worksheet from January 1 until September 30th with those expenses plus your revenue to us, because that's what we'll report on your personal tax return. The rest of the year from October 1st to the 31st of December, that's income of your corporation, has nothing to do with your personal tax return. So when you're in that situation where you are in transition from being an unincorporated sole proprietor to an incorporated professional operating through their professional corporation, that transition year, you would provide us the information from the first of the year until the date that you got your certificate of authorization. All right, that's the second scenario. The third scenario is the one which addresses this question, which is I have a professional corporation, I've had it for the year, I'm an employee, what do I claim on my personal return? In our case, you claim nothing. It all goes through your corporation. Your corporation claims it and reimburses you for the expenses that are yours to be reimbursed. Auto, home office, supplies, professional dues, CMPA, CPSO, all of those types of things, so that it doesn't get reported on your personal return, with some exceptions, but your personal return is usually very clean, very simple at that stage, and we're not reporting anything as far as business or employment expenses. It all goes through the corporation. I hope that answers that question. Any others?
Yep. We have two questions here that are sort of the same.
Yeah.
Can you claim the commute from home to work, or does it have to be work to work?
You know what? I would say it depends. And so for the person who's asking me that question, send me an email on that. I need to know more about your circumstances because it varies. And I don't want to bore others who might be on this call who this doesn't apply to. So I can't, without going into a long explanation, give you an answer to that. Contact me, please, on the side, and we'll discuss that.
And this one is asking, can car mileage outside of a daily round trip, meaning to and from work, be claimed?
Yes, so thanks for asking. That's a great question, and it underscores an important concept that you need to keep, not just with car expenses, but with any expense. Listen, if you incur an expense in the course of earning your income, whether it's a car, or whether it's this thing, or whether it's my cell phone, or whether it's a book or a frame for my credential, if you incur anything in the course of earning your income, that is an expense. Now, I didn't say you could claim it. I just said that that is something you want to keep track of. So to your question, if you're making a trip to the bank, is it business related? Is it practice related? If so, yes, those kilometers count. When COVID's over and we have the privilege and the opportunity to get together and you drive to my office, is that a business related trip? Yeah, you're coming to see your accountant. So is there a connection between incurring the expense of operating motor vehicle and earning your income for that trip? If the answer is yes, you keep track of the kilometers and that goes into the mix, into the pro rata share of expenses that you claim, or you get reimbursed if you're using a corporation. But that's what would constitute a trip that you could claim. The same thing if you're taking a colleague out for a cup of coffee or for dinner, or if you're buying supplies. If you're incurring that expense, if you bought a stethoscope or a reflex hammer or a computer and it has something to do with earning your income, that's an expense. I want to know about it. All right. So I hope that answers your question. But that's the concept I want you to walk away with, is drawing that connection between the expense and your income. Now, that doesn't mean we can claim everything. You know, sometimes people say, well, then I want to claim my dry cleaning. No, I didn't say we could claim it. I just want to know about it. I can then advise you as to whether or not we can claim that expense. All right, anything else?
If we are self-employed and work from home more than 50% of the time, do we still fill out the T2200?
You don't fill out the T2200. Your employer fills out the T2200. If your employer refuses to fill out the T2200, then you can fall back on the simplified method, which is $2 a day, no verification needed, times the number of days that you were working from home, with a ceiling of 200 days, so it's $400. But if you can't get a signed T2200 form from your employer, either the T2200, the regular version, or the T2200S, which is the short version, then the only option you have is to claim the simplified method. All right, but you've got to get that from your employer.
Does that apply to people who are self-employed?
Well, if you're self-employed, no. If that's the case, then you fall under business expense rules, which is workspace from home. So if that's the case, then you could certainly claim home office in that situation.
Okay, another question here.
I need to qualify that, unless you have an office somewhere else. So again, that's one of those little bit tricky questions. So if you have been provided by your employer, by the hospital, or by your employer with an office, and that's where you do your work, then you won't be permitted to claim home office. However, if that's not the case, or if you have multiple sources of income, where some sources of income don't provide you with an office, whereas others do, then there may be an opportunity to claim home office against some of those. So for example, if somebody's doing telemedicine, then they're not doing that from an office, they're doing that typically from their own home. That would be an example of a stream of income whereby you could claim a portion of your home expense as home office. All right. Sorry, I cut you off and stuff. Anything else?
Yeah, we have a few more questions here. Wasn't there a second business rent relief program for September to December 2020?
Yes, there was.
Yeah, that's all the question is asking.
Okay, yeah, there's been a few iterations of these different types of programs, so yes.
And what is your deadline to upload documents to the client portal?
Yeah, so in busy season, we say to people, we will actually give a date. It's usually in early April. So it will probably be the end of the first week of April. So don't wait, don't linger, or we won't guarantee to get an estimate or get the return complete. So don't hold off.
And if we bought a second property and kept the first property as a rental, how do we submit the revenue and expenses on the rental?
Well, so the scenario, Mustafa, was the person lived in it before? Is that right?
Yeah, because they bought a second property, but kept the first one still.
Okay, and they rented the second or they rented the first?
They rented the first.
They rented the first. So it was their principal residence beforehand, and then they converted its use and they made it into a rental property. So besides the revenue and the expenses from the date forward, and even some of the expenses beforehand, because maybe you're having to get the property ready in order to rent it. You may have to paint it. You may have to advertise and wait for tenant and go through a credit process of approving the tenant and things like that. So all of those expenses can be claimed as rental expenses against the rental income that's generated. By the way, just a small note as an aside, people oftentimes aren't aware of this, but when you're a landlord, you will get a deposit from your tenant. The tenant is legally entitled to interest on that at a prescribed rate each year. So if you are a landlord and you've received the last month's rent, you have to pay interest on that. It's a deductible expense, but if not, the tenant has the right to reduce their rent paid to you by the amount of interest that they're owed. That's an aside. In this situation, the property was your home, you converted it. So for income tax purposes, there's what's known as a deemed change of use. The property was your home, now you've converted it, it's now into a rental property. So it's at that point that your principal residence exemption coverage would no longer apply unless certain circumstances happen. You can elect to keep that property as your principal residence. Maybe you got seconded, maybe you're doing a stint in another city as you're doing your residency and you keep your house, but you turn around and rent it. There's an election to be filed to keep that as your principal residence. Why do you care about that? You care about keeping it as your principal residence because so long as it's your principal residence, if it goes up in value, there is no tax on that increase in value of your property. So really important that you understand the significance of the principal residence exemption. It exempts the property from tax for the gain. If you bought the place for $500,000 and it goes up to $900,000, and at that time you say, okay, well, I'm now going to rent it, but I might move back into it, or you can file an election to continue it as your principal residence beyond that date. So that as the property continues to grow in value, you continue to shelter it from tax. But there are conditions around that election. From the date forward, when you start collecting rent, that would be the period of time. Maybe the month before as you ready the property, but I wouldn't take advantage of that. Sometimes there's situations too where people have a property and it's a mixed purpose use property, like it's a cottage for them as well as a rental property on Airbnb. It's a little bit tricky, what expenses can be claimed and so on. If that's your situation, talk to me about it. It's too involved to deal with it here.
If I have a professional corporation, but I've also done some consulting work outside the corporation, how do they report this?
Yeah. So if it's a simple situation where, for example, you have a corporation that's a medical corporation, think of it that way, or a professional corporation, and you also have some rental income from a property that you own that has nothing to do with your professional corporation, would you include the revenue from that rental property in your professional corporation? No, you wouldn't. It's completely separate. It has nothing to do with the two. Well, in the same way, it's possible that your self-employed income may have nothing to do with your corporation. Or another situation is when, for example, a physician decides that they're going to do some locums in another province. Well, that's self-employed income at that point. They can't flow that income through their professional corporation here in Ontario if that's where they're registered, or any other province for that case. So what do? We report the income from the self-employed on a schedule called the T2125 form, as well as any income that's paid out to them on a T4 slip or a T5 for a dividend out of their professional corporation. So the fact of the matter is we do both in those scenarios, all right? We report both.
All right, one more question here. As someone who is self-employed, how are home rental costs for personal living space applied as a tax credit?
Yeah, it's not a tax credit. It's treated as a deduction. And I'll make that distinction because there's a lot of confusion, as is in this case, as a tax credit. A tax credit is something that reduces the amount of income tax that you owe. You owe $50,000 of tax, you have a tax credit for tuition in the amount of X number of dollars, it reduces the balance you owe, all right? The tax credit is the same value for me as it is for you or for anyone else. The tax credit has the same value for Warren Buffett as it has for me. Think of a tax credit as a gift card. It's a gift card from the government. The value is fixed. Now, You asked about the expenses with respect to renting out a portion of the home. Those are deductions. Why the difference? Why do we care? Well, a deduction reduces the amount of income. The higher your income, the higher amount of tax you'll pay. The higher your income, the higher the value of the deduction is. So if somebody's in the top tax bracket, they're paying tax at 53.53%. If they can get a deduction of $1, they've just saved 53.53 cents on that dollar. But if their income was $50,000, they've probably saved 25 cents at most on that same deduction. All right, so that's the difference between a deduction and a tax credit. Now, if you're renting out a portion of your home, the expenses that can be claimed would be property taxes, interest on mortgage, repairs and maintenance, insurance. Those would be the broad categories. Utilities, if you're out of pocket on utilities. But how do you distinguish the portion that is attributable to the area that's rented out versus the place that you occupy in those situations where it's a split use property? In that case, it's a pro rata share of square footage. So you say, what's the square footage of the house and how much of the space am I renting out? I'm renting out 30%. I claim 30% of all those expenses. There is also a claim for capital cost allowance, that's like depreciation on the building itself. In most cases, I would say to people, don't bother claiming it. You'll regret it later on. But that is another deduction. But to answer your question specifically, the allocation of the expense is based on the square footage rented out in relation to the total square footage of the property.
Oh, sorry, Jonathan. They also just clarified. They said they're actually renting.
Oh, they're renting.
Yeah.
Okay. Same principle. Pro rata share of the total square footage of the place that's being rented, and then it gets claimed on that. Now, one slight variation on that you should be aware of. It assumes that you have a dedicated room. You have a bedroom that's turned into an office, as an example. So it's easy. That's the office, right? That's the sole purpose of that room. But what if it's an office and a guest bedroom? We get into one further iteration of this, which is square footage of the office in relation to the total square footage of the house. That's the first calculation. Secondly, how often is it a bedroom versus how often is it an office? There's a percentage there that gets applied to the initial percentage, so it gets ground down. All right. So if it's your dining room and you're working from your dining room table, you better think to yourself, how often is this really my dining room versus how often is this my workspace? You better be able to, if questioned, support your rationale for your claim. Okay. I hope that helps.
And if we have an MPC but did consulting work for, let's say, pharmaceutical lectures or medical devices, that gets reported as MPC income, since it's related to our medical training.
Is that a question?
Yeah, he's asking if the income from the consulting gets reported as his corporation income, since it's related to the medical training.
Yeah, I would say it depends on who the agreement is with. Hopefully you've got some sort of agreement in writing that deals with Dr. Bill X, and that's the contract for that consulting work, versus one that says, no, I want that to flow through my corporation. Before you pay me anything, make sure that our agreement is that any payment gets paid into my corporation, so that there's a clear trail between the income that's earned and who is the person or entity that earned the income. All right, so I would go back to the original documents if there are any, and sometimes there isn't. So maybe there's an email trail that would give some clarity as to who was the participant in that arrangement. So that, because after all, you're going to get a check, and the check is going to have a name on it. What you want to be careful of with this situation is you do some moonlighting, for example, and you think, okay, great, I got my PC, I'm going to deposit that money into my PC. I want it flowing through there. And then come tax time, you get a T4 slip, or a T4A slip, sorry, not a T4, but a T4A slip. If that's the case, you have now double counted income, because the government's going to expect that you're going to report that income on your personal tax return. They've got a copy of the T4A slip. And so if they don't see it, they're going to send you an RFI, a request for information letter, and they're going to say, why didn't you report this? And at the same time, you've reported it potentially as income in your corporation. So it's important that you let us know when you've deposited money into your corporation that could otherwise be allocated to you on a T4A slip. All right, so be careful of that. It is very easy to double count those things. So go back to the contract. If you have it, who were the parties to the contract? That will determine, in addition, if it's a check, it's straightforward. It's out to you personally. It goes into your personal account. We report it personally. But if it's an electronic transfer, sometimes those aren't as easy because, you know what, there's no name. It just gets designated to a bank account electronically.
That's it for questions.
That's it. Thank you very much, folks. I hope this has been helpful. If you have any other questions about this, here's my contact information. Feel free to send me an email or give me a phone call if that's easier, or a text. And we are running these webinars on various topics. So if you have any colleagues that think might be interested on the pros and cons of incorporating a practice, that's our next one. Let them know, and we'll be happy to add them to the list. But in the meantime, thank you for your time. I hope this has been helpful. And if I haven't addressed a question, or if I've told you to contact me separately to address a question, I'll look forward to that. All right. Thanks again for your time. Have a great evening.